It's been a tough year for home buyers who faced high prices, elevated interest rates, and limited inventory. What's next for buyers, sellers, and housing stocks? My guest is out with a new forecast for the housing market heading into 2025. Joining me now is Zelman Associates Executive Vice President, Ivy Zelman. Ivy, thanks so much for coming on the show.
Thanks for having me.
So let's start with the question that is on the minds of certainly anybody who is in the housing market as a buyer. Is it going to get any easier to buy a house in 2025?
Well, unfortunately, I don't think so. If we are in an environment where rates remain higher for longer, we are at a very high level of stretched affordability. I think there's been a real bifurcation, though, in the market with respect to the entry level being much more challenged than the higher end, which continues to outperform with a lot of cash buyers. But it's pretty tough out there finding a home and then qualifying and coming up with down payments when we're looking at entry-level buyers today.
So speaking of rates, mortgage rates are based loosely on the 10-year bond, which recently closed about 4.5%, and then a spread, which varies, but in recent years that spread has been getting bigger. Can you explain why that is and where you expect to see it go from here?
Sure. The spread has actually come down from the highs. It was over 300 at some point. Historically, it's been about 160, 170 basis points over the 10-year. It's kind of hovering around 235 right now. And the big part of the spread being as wide as it had gotten to was really due to the fact that the Fed stepped out of the MBS market, along with banks which had been buying MBS. And then you also look at the risk of prepayment speeds accelerating. So MBS investors want higher return. And also the risk of default has been some of the culprits that have kept those spreads wider.
Alrighty, so do you have any advice for people? I guess it would be different depending on what part of the market you're in, but let's say you are in that lower, more difficult part of the market. What's your advice to buyers?
I would buy new construction. Builders are providing a lot of value by buying mortgage rates down to in the 5 range, and therefore mitigating that stretched affordability. I think in the new market, there's definitely a lot of opportunities with discounting prevalent for buyers to take advantage of that.
So that's a great segue. What is your view of the market for builders and housing stocks?
I think the builders are really well positioned to continue to drive volume higher. They've got a lot of new communities coming out. We've got anywhere from 5 to 10% growth in community count. They also have a big pipeline of land that they'll be working through. So while they'll have to look at price as the lever to move that inventory, I think it will be the benefit to the consumer that's buying those homes, and builders today that are focused more at entry level offer the best value.
Because there are some spec houses out there, right? I mean, that's been an okay market, not quite where it was, obviously, in glory years of the past.
Actually, that kind of was a perfect storm this year. The builders were accelerating spec as the spring selling season got off to a strong start. And as the market unfortunately saw higher rates coming into the fall, they are working through spec now, but they're dialing back the spec. So I think what we're seeing is a little bit of an adjustment phase, but that's a benefit to the consumer.
So among those housing stocks, are there any that your firm has come out bullish on? What do you like?
Well, actually, we like Lennar. Lennar just announced earnings yesterday. It was a pretty challenging quarter. The stock pulled back quite a bit. We think it's a good entry point. And looking at where it's trading, the valuation really typically doesn't go much lower at 1.5 times book today. I'd also say that they announced the spin of about 6 to 8 billion of land that will be a company called Millrose. And that's going to really allow for them to be driving returns much higher. And I think that transformation will ultimately result in one of the best performing builders from a steward of capital. All aspects of their ratios will be the best in the space. So I'm pretty optimistic that this pullback is a good opportunity. We also like the higher end builders just because the bifurcation in the market is pretty pronounced where the high end continues to outperform. So we like Toll Brothers, Dream Finders, and Taylor Morrison, just to name a few that really are focused more on that high end.
One more question. Do you see any consolidation in this market? I mean, there's still quite a few players in the market. You named 2 of the smaller ones there. People wonder, is Warren Buffett maybe going to buy an entire builder outright? Well, what are your thoughts?
Well, I think Buffett's been pretty aggressive in terms of acquiring builders. I think they have 9 under Berkshire Hathaway right now, which would be within the top 5 if you look at the aggregate volume that they have. But I think as it goes to buying a public company, I'm not so sure that there's the appetite for that. But there's consolidation happening. Lennar just announced that they acquired one of the top 20 builders in the Southeast. And what we're continuing to see is the consolidation of publics accounting for more than 50% of the market share of the new home market. When I started covering the space 30 years ago, it was about, I don't know, high single digits. So they've done a great job of growing organically and outperforming as well as growing through acquisition. But I'm so sure that we're going to see consolidation within the public arena.
All righty. Well, thank you so much, Ivy Zelman.